In this video, you will find out if market structure is a lie or no. Many people are trading liquidity nowadays, and many say the structure is a trap and that you should not be trading it. How true is that, and why are all these people saying that market structure is a lie? Well, if you want to get the answers to all these questions, then you better stick around till the end because your mind will be blown away. I promise you that. I'll show you the truth based on tangible examples on the chart. So no more guessing work for your trading. And this being said, it's time for the quick intro, and I'll catch you in a bit. Alright guys, back with Chachi Forex, and let's get started. This video here is going to be probably one of the most important video that I'm making in this channel, and I wish I had this video because it took me so many years of hard work to arrive to the conclusions that I'm about to show you guys. And trust me, your mind is gonna be blown away because this is something that I'm literally bringing on this video from my personal experience, from my personal day-to-day struggle that I've been going through over the last few years. So it's not something that I've learned from people, and I'll show you why what I'm going to say will make so much sense just in a bit. Okay, so this being said, let's see what is going on. So nowadays, there is this trend going on where people trading different type of concept. We always had people trading support and resistance, people trading patterns, flag, head and shoulder, whatever you want to call it, whatever you want to name it. But now we have the hot topic, which are the SMC trading, which is the one that I use a lot. And then we have another one, which is the supply and demand. Very common actually, is one of the trading strategy they've been using for so many years. And then the last one, which is probably the one that's currently trending, which is all about around liquidity. Okay, so trading liquidity, and you basically take a trade after a so known inducement trade. Inducement trader, they call themselves also agro trader, whatever they want to call it. And obviously it has been carried out from the man himself, the legend ICT. He has been actually discussing and making so many videos around it, and he was actually teaching, and he's still teaching people to take trades after you have a liquidity graph. Basically that's the core concept of all the things that he's teaching. However, what actually started happening is that, and this is where I started actually having very difficult moments at the beginning, is that, as I always say, all the strategy they use in the market, whether it's SMC, SND, ICT, whatever you use, they all work in their own way and in their own approach. Okay, but what actually happened is that sometimes you have a scenario where this will probably clash with this will probably clash with this, and probably both these gonna clash with this. So what do I mean by this? I actually made a very solid video on that. So if you guys watch this video here, I discuss this a lot, and I really go in depth and explain it, the differences between all these famous strategies that people are using nowadays. But the most important thing is that at one point there are so many concepts that came into the market that it just starting clashing with each other. So if you start learning SMC, you might not gonna be able to find yourself going along with the way of trading with, I wouldn't say ICT, because yeah, he does teach a lot about liquidity, but let's say in general, with all these liquidity things that you can see on YouTube, it's like definitely they're gonna clash a lot. And why they're gonna clash, I'm gonna give you some real life example and some of the trades I've taken actually over the last week to show you why it is important to be able to distinguish this concept I'm talking about now, and in order for you to pick then the right one that is the most suitable one for you. Now, before I go to it, I want another thing important, guys, you have to understand is that there is no such thing that this strategy is better than this one, this strategy. Come on, stop it. Like literally stop it, because there are so many gurus, fake gurus that will tell you, oh, don't trade SMC because maybe your stop loss is my TP or your stop loss is my entry and whatsoever. Stop with this crap, because guys, if you are not able to be humble, if you are not able to respect others on this game, on industry, you will never ever grow up as a trader. Okay, because being humble and respecting other way of trading is the most important things in this game. Okay, now, and obviously the same goes also for people that trade support and resistance, because we've got a lot of people trading support and resistance, but I'm not touching on this one. And it's the same goes here as well. Like this type of approach sometimes gonna clash with this one, or sometimes gonna clash with this one, or even this one over here, right? Now, Why it is important for you to understand is because when you have so many information on all these different type of strategies, what it actually tend to happen is that you get very confused. Because let's say for example this one, literally the first one that came in front of my eyes. If you go structure wise, right, what you can see is that, right, 1 second. So what you can see is that you go low, you go high, you go low, you have a high over here, then you have some sort of internal structure over here, right? So you can see the price is make like 2 leg push to the upside before breaking the structure over here. Now some people, especially people that trade SMC, they might have taken this trade on this zone based on what they can see from the candles. So what do I mean is that if you have, let's say, liquidity over here, because this is the low that has liquidity that gets taken out, and then you see a solid push to the upside, leaving imbalances behind, which then eventually actually gives even a nice reaction. You can see, and it breaks also to the upside, giving a false break of structure, that would have hidden a stop loss. And then what happens is that when this liquidity gets taken out, people that trade liquidity, they'll be like, oh, the low has been taken out, now I'm taking the trade over here, and I'm going all the way to above, right? So then whoever is trading SMC, that would be like, oh, I hit a stop loss, it didn't work. But then on the other side, people that just trade purely supply and demand, that will be like, okay, that's my SMC zone, that's my demand zone, and if I have to be real honest, and you're trading SMC, the whole leg itself here can be classified as your point of interest. Not only this, but even this one as well. Why? Because this low here is the one that made the high over here. But anyway, eventually you can see the price has taken out liquidity on this zone as well. So in this case, what is actually happening is that whether you're trading supply demand, or whether you're trading let's say smart money concept, you will have taken out stop loss over here, stop loss over here. But now if you're trading liquidity, you know that this low has been taken out, which is probably the low from the previous day. So yeah, it's a previous day low. So now you have a previous day high, previous day low, and that's why I was saying the liquidity comes into the play, right? So that'll be like, oh, now there's an inducement, I'm taking the trade, and boom, let's go. We're going to the upside. And those people nowadays are the one who is telling you, oh, your stop loss is my entry, your stop loss is my TP, blah, 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 all this kind of stuff. Anyway, just leave it. Now, this is an example over here, right? Let me show you another example using the same thing. And what do I mean is this? And it's the one that I've taken actually last week, all right? So you can see clearly the price has broken all the way downside, right? So you have price now breaking this structural low, which is a very important one because it's the one that is holding all the way up there, right? So then this becomes a very, very strong and solid supply zone, isn't it? Now what happens is that when price comes here, you probably would be looking for a sell to bring price all the way down here. However, what actually happens is that price breaks to the upside and it doesn't give you an entry. So now, one thing I need to now pay close attention, right, is that in this scenario, you try to follow the order flow, right? So you low, high, low, high, low, high, low, and then you had a high. You got taken out, and then you couldn't take the trade. However, you might have taken this trade over here. So what happened is that this has taken previous day high and low. So this is the previous day low, taken the liquidity, and then it should all the way up to the other side, right? How about this one? Well, this one here, if you see the date, is Friday, the 8th, September 8th, right? Which is literally the last month high, and then this one is literally the last month low. So what is this telling you? Is that if you trade liquidity, and you know how liquidity works, usually when people that trade liquidity and they wait for the inducement, they always go for previous day high and low, the way I said it here, previous monthly high and low, and previous weekly high and low. So that's basically most of their work goes around that type of liquidity. So in this case, you had the last month high that has been taken away, right? So now, if you trade order flow structure, that will be like, oh, you know, now price has taken monthly high to the upside. You know what? Now it's gonna reverse because it's taken a major liquidity. So you're gonna see a very strong move to the downside. But guess what happens? You need to have that over here because it took out the previous day low and then it should all the way up there. But look at this. Look at here. When price take out the zone over here, price goes high, low, high. It breaks to the downside, right? Now, here is one of those moments where you have SMC trader and liquidity trader taking the same trade. What do you mean? Is that this, it broke to the downside. Why is it important? Is because liquidity wise, it has taken a very important monthly high to the left. So therefore, price broke the structure. Now we expect a retracement. So that would have taken definitely a trade from here. I can guarantee you that most of the people that must have taken a trade from here. And guess what? People that trade structure, including myself, I have taken the trade there. And guess what? I hit a stop loss. Yes, because price broke to the downside, right? And then I left a pending order. I hit a stop loss because it violated my zone. It just went higher. So what happens next is that what I saw personally, right, is that price is breaking to the upside, even if price has taken whatever liquidity to the left. So that means the prices just want to go higher. So demand is so in control over the supply, because look the way price is just pushing to the upside, right? So that is already telling me that there is still strength from the buyer side to keep pushing market to the upside. And guess what actually happened? I've taken a nice buy from somewhere around this zone. Okay, now anyway, let me show you. Those are my MT4 screen for the trade, because I actually take more than one trade. So I'm not sure, it was probably somewhere around here. Yeah, anyway, you guys can see from the screenshot, it was, I think I refined, or probably I left a pending order. I'm not sure quite yet now. But yeah, you guys can see from the screen. And here I have taken from M1, right? And here I've taken another trade. Why? Why I've taken the trade? Because again, I can see price hit my stop loss, it didn't go for a sell, it broke to the upside, it retraced. So I've taken according to the order flow and the structure. Price went all the way up. Then again, I have some strong momentum. Retracement, another trade over here. I think, yeah, that's that one here. I've taken it from a smaller time frame, M1, so somewhere in M1. And if you guys want to see the trade breakdown, the whole trade breakdown in depth, just comment below. I'll be more than happy to make the video. And then guess what? At least fast target somewhere around here, new higher high. I didn't take with at 8 pips. I think it was even lower than that, probably somewhere. I'm not sure. Anyway, so that was one trade here. And then I had another trade here, which is definitely not 14 pips, because I don't usually take anything beyond 10 pips unless it's not a very high volatile pair. Anyway, you guys can see here on the right corner side the MT4 screen for both of the trade. So eventually they had approximately 1 to, I think it was like 1 to 10. One was 1 to 10, another one was 1 to, yeah, I guess 1 to 8 or 1 to 10. Anyway, I'll make a video and I'll do the whole breakdown in depth with that. But anyway, that's another thing. I don't want to tell you what I made or how much I made. What I want to show you here is that look what actually happened. So structure-wise, if you are structure trading, SMC trading, or you're trading demand and supply, you had the chance and the opportunity to take 2 beautiful trades in a row, back to back, just following your structure and the order flow. So now the question that I should be asking to people that trade liquidity or whatsoever is that, where is your trade? Now imagine them that might have tried to short so many times because now they know the monthly high has been taken, so they expect the retracement. And guess what? That probably have taken stop losses as well, right? So the way we were trying to go buy, I'm saying we because I trade structure and supply and demand, it's a mix of both. The way I tried to go buy before and it didn't play out, it played out for them, is the same thing that now we did again, the both sides, right? But this time our trade played out, that trade did not play out. Why? Because price then came here, went high again, and probably now I have to see what happened over here to the left. Maybe another important liquidity, yeah, might have been taken somewhere around here. I'm not sure. So this one, which one did they say? Right, so this one is a monthly high. Then if you go to the left, I think the most valid liquidity might be this one. This is a very strong one, and I think there is something here as well. So yeah, I might have seen something taken. Yeah, there you go. That might have seen again. They might have seen this high been taken. Someone probably have shorted over here again. And guess what? They might have taken it all the way down here, but then they have definitely hit a break even. And then if you have taken it here, in this case, that would have played out nicely. Now, why I'm showing you this is because if you guys are understanding what I'm breaking you down here, you will actually understand that at the end of the day, it doesn't matter what you use. The most important thing is that you use it and you make it work for yourself. And everything, trust me guys, everything works. It took me so much hard work and so much time to understand this, but the way I'm showing you guys now, I can show you that in every single pairs, in every single time frame, in every single type of structure, whatever you want to call it, everywhere. Okay, so this is a very, very important lesson, is because sometimes what happened, and this is something that I messed up a lot about, that's why I want to share with you guys so you can learn from my experience, is that when I started seeing that I was taking the trades and I was getting stop out like this because, you know, of the liquidity grab, whatever, I started learning how this works, how this gets taken out, right? And then when I started doing this, I messed up everything, because it's just, you know, trading is something like you change one variable, you have to change everything. Like it does almost everything. You can, you know, you can make better what you're doing, but if you change the foundation of your trading style, which is in this case the strategy, you have to change everything. Your psychology, your risk management, your mindset, your way of trading, your style of trading. So what happened is that I've seen a lot of doing ping pong up and down. I wanted to learn that. I wanted to improve that. And I started jumping myself into this taking this adventure and learning, okay, how do I take this? How do I take this? How do I take this, right? And I learned it. Eventually I learned. I spent even quite a good amount of money on that, so many times, hours and whatsoever. But then I realized at one point that, this type of approach wasn't suitable for me because I was not happy with it. There were so many variables that were not clear to me. Well, I spent over the last 3-4 years only within SMC and supply and demand. So that's when I started seeing a huge decline on my performance because my equity curve started going down, 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 down. My confidence, my mind, my frustration, my psychology, everything just got ruined like badly. But then eventually when I started understanding that no, whatever you do on the chart, they're all words. But the most important thing is that you need to know how to make it work based on your trading plan, based on your trading journal, based on your risk management, and mostly based on the way that strategy itself is the most appropriate and comfortable to you. When you understand this and you pick that specific strategy because you find yourself comfortable on dealing and seeing that type of strategy that's good for you, trust me, nobody can stop you. All right. So you might see so many times that I talk about a lot of fake balls, the fake breakout structure. That I probably, if I have to be honest, the way I trade, the only time when I hit a stop loss and the only reason I hit a stop is because I have a fake breakout structure. But guess what? That fake breakout structure might be a very good trade and maybe it's the only type of setup that all the traders with liquidity trading, right, they take the trade. So for example, what do I mean is that here, if the order flow has been broken, for me this is a breakout structure, I would have looked for a sell. So if I would have left a pending order, that would have been definitely 100% guaranteed a stop loss. While for people that trade liquidity, for them that would be a continuation, right? And the same goes over here as well. So now you can see that, let's say, in this case, I wouldn't say this is a fake breakout structure because based on my understanding on liquidity trading, I know that if price takes a very important monthly high, in this case on September, this could have been a very solid breakout structure, a valid breakout structure after taking the liquidity out to the left. This would have been a stop. But if let's say this was not a monthly high or low, I would have still gone for a sell, and people that trade liquidity, that would have gone for a buy. So in these cases, for them, it will always play it out. In the other cases like this, and so many more, it will play out for us. So this is very important because we know that price goes up and down. Price goes, there's only two ways that goes, but the way it goes, the way we want to perceive price going from point A to point B is literally everything within our mind, and it's literally on us to be able to be good on understanding what type of strategy we should be using to blend that with our risk management. Because it doesn't matter what type of strategy you use, eventually none of them will have 100% strike rate. Okay, so for example here, again, it's the same thing. Look, this low has been taken out, probably is a weekly low, right? And then you have a breakout structure. So I would have definitely 100% looked for a sell over here, right? But people that trade liquidity, that will be like, oh no, we're going higher. Why are you going higher? Because maybe there's another important liquidity over here. Oh yes, of course, look at this. All these equals over here. So that would be like, this has not been taken out. This must be a false breakout structure. We're going and we're targeting all the way above there. And which is true. In that case, it played out for them, right? But then let me show you next what actually happens. If you continue to play with structure, right? So in this case, I'll probably have a stop loss. Then price goes high, low, break to the upside, and guess what? Here, you got your demand. And there you go. You got one trade over here. That's already giving you all the way up here. Then again, here, you have another breakout structure to the upside. And guess what? You got demand. And you take another trade all the way up there. Guess what? You try to take another one, bam, this is a fat stop loss in your face. Now, people trade liquidity, that will be like, oh, I'm taking it because to the left, liquidity has been taken, so we're going for sell. Okay, it's fine, I've taken my loss because I needed to take that. I mean, you can have always 100% all of it, right? And now what happened, look at this. Order flow start getting very nice and clean, and then structure, another trade over here, right? You see this one. So this breaks to the downside, there is an entry over here. Then again, this break to the downside, there is another entry over here. This break to the downside, there's another entry over here. You guys see what I'm showing to you here? Right? So eventually, I might have taken a loss over here because let's say that I was looking for a buy over here, right? Because that's the demand. So that's our stop loss. Why? Because I followed the order flow. It didn't play out. It took me out. Then I followed the order flow again. Boom. Another stop loss. So I got one stop loss here, one stop loss here. But then eventually, I take this one. Now, based on the way you refine or the way you take the trade, right? That could have been at least, I'm saying at least 1 to 3, 1 to 4. So let's say I'm not going 1 to 10, 15, or 20 the way I usually say or I show it to you, but I'll keep it low. So you guys can relate better yourself to this, right? So what happens is that if you take this for 1 to 3, already you will have recovered 1 and 2 trades over here. And then again, here, when it breaks to the upside, you got another trade. Let's say this one is another 1 to 3. Why? Because it came to the extreme, a new high, 1 to 3. Then you go here, you got stop. So now what you got 3 losses, 1, 2, 3 losses. You have 2 trades of 1 to 3, which is roughly 3% up now, right? and then you got one trade here, one trade here, one trade here. I mean, come on, guys, look at this. Then you got this high, then the low. You could have tried to take this trade based on your understanding, because this actually came on this extreme decisional zone, right? That could have been on the trade, right? I mean, do you guys see what I'm talking about? So just because you hit a one stop loss here and one stop loss here, and you see that you hitting a stop loss and someone on social media is taking exactly where you hit a stop loss, do not let yourself get demotivated. Do not shift your focus or your attention to that specific strategy just because you see that person taking a trade where you hit a stop loss. And trust me, I used to do that a lot. I destroyed myself by doing so, because I used to be like always, how come I'm taking a trade because I see a sell and these guys taking a buy where I took my loss? So I used to get confused, and I was like, I want to learn the way he does it. I want to learn. But then eventually doing the way he does it, I lost this strength that I had personally, which was basically being able to take those beautiful trades of continuation, like this one over here. If if you would have taken all of these, that would have been 1 2 3, 1 2 3, 1 2 3. That's already 9% here. Then you got 3%. Like you already made 12%. You could have made already 12% all the way from just this leg. Do you guys see how powerful is what I'm showing to you now? I hope you guys are understanding the value of that, because trust me, it took me so much to put myself into it and be able to understand that no matter what you do, everything works. All you gotta do is just stick to it and make it work. And I'm not saying that, oh, if you do SMC, you have to always stick to that and do everything that SMC says. Indeed, what I say myself is that I trade SMC, I trade also supply and demand. So my way of seeing the market is just the mixture of the concept that I'm using it. Yes, I can also use liquidity. Sometimes you guys see me telling, oh, there is equal high, oh, there is equal low, blah, 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 whatever. But those are like confluences that I'm adding to my personal specific strategy that I'm using in order for me to take the trades. Okay. So the way I showed to you before, the USD card, you guys seen my the MT4 and everything. I did it using supply and demand SMC concept, right? Like just following the order flow, because price broke through the upside. I went to refine the zone. I took the trade. Broke through the upside. I had a POI over here. I couldn't take that. Then I waited for M1, M5 shift, M1 shift, and then I've taken the trade, right? And then I could have taken another one here. I didn't go through. Well, it's fine. Doesn't matter. And now, but then price eventually melted. I think, yeah, this is the current price action. Fine. So now, guess what's going to happen? Definitely, if I see a retracement coming here, right? And this is not a signal, it's just a personal point of view, right? It's not financial advice or stuff, whatever. Based on the order flow, I'll be just looking for a pending order over here, or just wait for some sort of break to the downside pump and then going all the way down, whatever the price need to go, at least down here, somewhere around in the middle. That will be the first target, and that will be the second target, okay? So I know probably if you are watching this video and you're new on trading, this might sound a bit, I don't know, difficult probably for you to grasp it, but I can promise you the more you learn, more you practice, the more you do it, you will realize that eventually everything that's said in this video, it just makes sense. Okay, it just makes sense. So please, guys, every time that you're trading, every time that you're learning something, do not, like get demoralized or don't lose your confidence if you see that things are not working and you see other people are taking the trades when you're hitting stop loss. And most importantly, be always humble and try to respect others, because I can promise you that there are so many traders in the leaderboard on FTMO, on different pro firm, that they have no clue about liquidity, SMC, or they just trade head and shoulder, they just trade support and resistance, they just trade, I don't know, some weirdest pattern that you can think of, right? And most of the time, they are the main one on the leaderboard, not people that always keep bragging and saying, oh, we are the best, blah, blah, blah. No, we are all the same thing, because nobody knows where the price is going. Nobody knows how the price moves. All we do is just we play with the edge and statistic. So in this video, and I suggest you again to watch the other video that I did. And I'm going to leave, again, the link below. This is the video. So you guys watch it so you guys can understand in depth what I just showed to you here. And then hopefully when you start implementing that, then you're going to start seeing a lot of great results. And all of this to tell you in this video is that structure is not a lie, right? Market structure is definitely not a BS as many people say, because a lot of people, also another thing that I forgot to say to you guys is that sometimes when people are saying, oh, SMC is not working, oh, supply demand is not working, or structure isn't working, the first question they should be asking to yourself, watching on what they're doing, is that how much do you know about the strategy? How much do you even know about the concept? I see so many people saying smart money concept doesn't work anymore. And I'm like, okay, show me what you know about smart money concept. How much do you know about it? They don't know nothing. They know half of it. They might know a little bit of it. They don't even know how to refine an order block. They don't even know why an order block is important, but then they're the one talking around and saying, oh, smart money doesn't work, or smart money, whatever. And the same goes for structure as well. A lot of people, they don't know structure, how it works. They're like, oh, it broke the structure. This is a break the structure, I'm telling you, right? Like, for example, this one is just the first one that came to my mind, right? I've seen so many people had scenarios where price goes high, low, boom. Oh, price broke the structure, we're going for buy. But that's the thing. You don't understand. Price did not break any structure here. Yes, it did internally broke the structure, but if you focus on the right time frame, that's your leg. And just because you broke this structure doesn't mean you're going for a buy. Eventually gave you a buy reaction, but then this is your leg. All right, don't make things up just because you feel like, oh, I see this break a structure, this break a structure. So then what happens is that you take the trade from here, right? Because it's a sell order flow, and then you go all the way down here. Now, if I see this break, is this a break of structure? Or because I break this high, whatever? No, it's not. Again, this is the high and this is the low. All right, and the same goes here as well. Right? People will, oh, I see break of structure, I see break of structure, I'm going for sell. But then again, this is your order flow. Okay, you need to have a break of structure. It's a must. Every time they have an expansion, right, and then you have a retracement, is a must that price will always break some sort of lower time frame structure in order for them to do their retracement. And just because something is broken in 15 minutes or 5 minutes, it doesn't mean that now we are sell and we have to go sell, because maybe 4 hour or 1 hour is ready to push price to the upside. Okay, so this simple thing I'm showing to you guys here, there are so many people that are not even aware of it. So they're the one then going and say, oh, market structure doesn't work. Why? Because they see the break of structure to the downside in 15 minutes, they go for sell, and then boom, they hit a stop loss on their face, and they're like, oh, market structure doesn't work. But again, because you don't take the whole narrative, the perspective about the market in consideration in order for you to get the final result. Okay, so this being said, I hope you guys enjoyed the video. I hope you guys gained value out of this video. If you guys want to see the in-depth trade breakdown, the way I've taken these two trades, just comment in the section below. I'll be more than happy to go in depth. I'll show you my entries, my thinking, what are the things I've considered, why and whatsoever. I mean, actually pretty much half of it, well, yeah, kind of half of it I explained over here, but I'm gonna go in depth and I'll show you these beautiful two trades I've taken last week. And yeah, that's pretty much it. So as usual, guys, if you loved it, share, like, subscribe, and I'll catch you to the next one.